Hello, this is Robert. I'm an attorney with TRP, and we're going to be going through offer and compromise for California Franchise Tax Board debts. This is brought to you by Tax Resolution Professionals. We're a nationwide tax law firm. You can reach us at 888-515-4TAX. Again, that's 888-515-4829 or online at trp.tax. So when you're going to do an offer and compromise with California, there's a few things you want to look at before you file. Make sure you filed all your required tax returns. There are some exceptions to this with returns from the early 90s and before. Sometimes I'll let you get away with not filing them. You may want to call the offer and compromise office before you file just to be sure. But if the tax returns are recent, for sure they're going to want them on file. And they want much older returns than the IRS does when you're doing an IRS offer and compromise. You should be current on estimated tax payments if they're required. Now, this is mostly required in self-employed situations. You should be paying as you go. I recommend pay monthly rather than quarterly even, and make sure the payments are properly designated so they don't go to old tax debts. The other thing is be okay with the FTB going through all your financials in detail. They're going to go through, with a fine-tooth comb, all your financials, your bank statements, how you're getting paid, and figuring it out and calculating it. So be okay with that. If you have more assets than you owe in tax amount due, good chance you're not going to qualify. There may be a few exceptions there, but most of the time that's going to be a disqualifier. If you have high income, if you owe $40,000 and you're single and you're making $100,000 a year, you're probably not going to get it. Doesn't mean you can't use help. We still help people in those situations by making it a payment plan that's affordable. And there's other things you can do. However, a settlement might not be an option there. Same thing if you made $100,000, you owed millions of dollars, and there might be some type of settlement option there. Very good chance there would be. If you're too young, the FTB discriminates based on your age. IRS does not do this, but they see that if you're young, there's a chance they can collect on you later. In most cases, the FTB has 20 years to collect on the debt, as opposed to the IRS having 10 years in most situations. So they figure we got longer to collect. We can wait for you. They're much more favorable to you if you're older with the FTB. The IRS is a little more favorable to you if you're older, but they won't discriminate against you for being younger necessarily. Younger people get offers all the time. With FTB, they can say, hey, you're too young. We're not going to accept this from you. The point is, don't waste your time or money if there's no chance. There's a lot of people that will send them out. They have no chance of sending it out, of getting qualified or getting this done. There's no point. There's a lot of firms that send them out for people and charge people for it, and the odds are very bad. Or they have no chance at all. So we like to inform people, let them know what they're going to get. And these are just some things you can take in consideration before you decide if you want to file an offer and compromise with California. So keeping current on estimated taxes is very important. Just make sure you keep up to date for the existing year. If you owe over and over, you're not going to get a settlement. A lot of cases are self-employed individuals. But if you're on a W-2 and you have a wage job, just make sure you're withholding the right amount and paying the right amount in. That's the same thing as keeping up on estimated tax payments. You don't do that, and you're never really going to settle. They're going to say, hey, you're not up to date. You either need to make an extra payment and catch up, or submit this again when you're up to date. Another thing to consider here is if you're at the end of the year and there's no way you're going to be able to pay off that year, you may just want to file in the next year and make sure you keep up to date. And I always recommend, if you can, pay it monthly rather than quarterly in offer and compromise situations. Another thing to note before we get into the actual forms here is mailing and collections. Okay. First off, always mail everything certified mail with return receipt on all correspondence that you mail to the FTB. Things tend to get lost. At least you have proof that you actually sent it. When you're doing offer and compromise, that's how you want to send it. Some agents may have you fax items later. That's fine. Just make sure you save the fax confirmations. And it is recommended to just follow up with the agent and make sure they actually receive the fax that you sent. Their government fax systems aren't always the most reliable, and sometimes they're just getting tons of stuff. If your case is in collections, like you've already got a letter, and you know that you're in a collections type situation, you or your representative, they should be calling the FTB collections line, let them know you're going to submit a settlement, an offer and compromise. And most of the time, you just ask them, say, can you please put a hold on collections while this is pending, and they'll go ahead and do that. And then what happens is your offering compromise starts processing, and they'll be fine for a while. And sometimes collections may require you to call back in and extend things with them. You always want to make sure that everything is on the collection side is taken care of, because if you don't, and you just mail the offer and compromise, and collections already sends out a bank levy or something like that, you're still going to have to go back and deal with that. Now on to the forms. Now we're going to go through filling out the forms, and you can find a detailed version of this on our main website if you go to trp.tax/FTB-offer-in-compromise, or just go up to our website. When you go to trp.tax, look at the tax help guide on top, click that and scroll down, and you can find this under California items. And now we're going to go on to the forms here. The thing that's nice about California is they use the same form since 2009. They haven't changed it. They call it the FTB 4905 PIT booklet. Okay, table of contents. There's no reason for me to go through that with you. They're going to go about the things what you need to know before preparing it, which are some of the things I went through. You can read that. Here's the checklist. Okay, so this checklist you can actually submit with the offer. You don't have, but you can just make sure you have the documents together. So you can submit this with the offer if you want. You don't have to. It's really just about having the documents with it. Verification of income. Your pay stubs, last 3 months, financial statements for the past 2 years of self-employed. You can use your tax return. A lot of the time, they'll just accept that. What we do often is if it's like a self-employed business that's a Schedule C, we'll just take out the Schedule C and use that particular part. Verification of your expenses, billing statements the last 3 months, charge card payments, bills from other creditors, personal loan statements, bank information, bank statements for the last 6 months. If self-employed, they want to see the last 12 months. They also want to include accounts that have been closed during that period. If you have accounts that are closed and you can't log in online, go into the bank, and sometimes they'll charge you like $5 a statement, but just do get it and send it in. It just makes everything process faster and easier. Usually for something like that, they won't reject it. But what will sometimes happen is they'll send another letter saying we need this to continue processing. So it's better just to have everything at once rather than letting it lag. Securities, investment account statements, all that kind of stuff. If you have securities that are worth more than the tax debt, another, kind of flag reason you might not get it. Current lease or rental agreements, they want to see what you're paying. Real property information, mortgage statements, escrow statements, property you currently own, sold, or gave away in the last 5 years. If you can't find this information, we have had agents that accepted like some things we found online related to it, but it's better if you have the actual documents. You can always usually find the old escrow company that you dealt with and request it from them. They should be able to send it to you. They may charge you a fee. Internal Revenue Service information. So if you had an offer in compromise with the IRS already accepted, you want to put that in there. Legal documents, marital settlement agreements, divorce decrees, marital property statements, trust documents, and bankruptcy documents. I would add to that child support documents, whether you're paying or receiving, is another thing you want to see in there. Medical information, physician's letter, including diagnosis and prognosis, or documents that show any medical condition that should be considered. If you're sick, disabilities, things like that. Power of attorney, if someone is representing you, they would throw that in there. When we do that for clients, that is included. Another thing I would add in here is if you have child care, that's another thing you might want to throw in here. Proof of payment for life insurance, those types of things. Now we'll go through the sections. So this personal information section 1 is really very straightforward. Name, social security numbers, you and your spouse. It's really not that big of a deal. Mailing address is physical address. Excuse the motorcycle outside. Employment or business income information. So also very straightforward. They want to see how long you work there, what you're doing, where it is you work. Same thing for your spouse. your general financial information, so bank accounts, retirement plans, IRAs, what do you got, and the basic info regarding it. Nothing really that special in this section. Same thing, vehicles. They ask for a little bit more than the IRS. They want your year, make, model, and license number, lender, pink slip holder, current value, current payoff, available equity. And one more thing I should actually go to on here is when it goes to your financial information, you're going to be adding up your balances here. So all your balances are going to be here, and then the total is here. And this is going to be used later in the paperwork. Now, same thing on the cars. Current market value, current payoff, and then the equity. So if the car is worth $10,000 and I owe $8,000, there is $2,000 in equity. But there's a couple things you need to consider here on these vehicles. And these are, I guess, our attorney tips. First off, the vehicle is probably worth trade-in value. It's not really worth, the full value. You haven't prepped the car to sell at retail. So at best, it's private party and probably trade-in. And that's fair to use. So we would use private party trade-in value. Maybe even a little less than that would be auction value. And those are fair things to use. So most cars are going to be negative equity. They're going to be a zero if money is owed on it. If it's a lease, there's no value. So those are the things to do. My recommendation is if you are about to file an offer compromise, you do need to get a car. It's best to get something essentially that is a lease. Usually is better because you can get something. There's no equity for sure. And what we do argue is when your lease ends, you have to get another car. One thing the agents will do, and this happens in IRS and sometimes in California, is they're going to say, especially if your payment's going to end soon, they're going to say, oh, this payment is ending soon, so it shouldn't be calculated. But with a lease, you say, well, you have to get another car again. And they always seem to accept that argument, at least so far. But anyway, that's just a note on that. And here's your available equity. The total is going to come here. Then, this is your life insurance. The face amount and the loan surrender cash value. So this cash value, there's going to be no cash value on most term life insurance. It's going to be whole life. And most people don't have whole life. So just check on that. Because a lot of time this number just ends up being, this number down here on almost every case we do is zero. So just check that you really do have a whole life. Security, stocks, bonds, mutual funds, money market. This is something, if you have a lot of this, you're going to end up attaching an additional page. And same thing, they're trying to get the values here. Values and totals. I think you get the flow of what's going on here. Value and totals. Safe deposit boxes, rented. Most people don't have any of that. Now you're going to see real property. If you're attaching additional pages of real property and you have a lot of equity in those, you're probably not going to be getting an offer compromise. So, most people that are getting offer compromise may have one or two places at the most. And if you have a place that's paid off, it's going to make an offer compromise tougher. If you're older and you have a place that's paid off, you still might get it. They might be worth still trying. And we evaluate these kind of on a case by case basis. But basic information, how your title's held. They want to know how much equity you have. That's pretty much what it is. Purchase price, purchase date. They're not asking for all the mortgage information yet. And they'll see that. They see that from your statement. General financial. So yeah, here's your more physical address. Another property area here. Charge cards, lines of credit. So this is all your credit card information. They want to see what your credit limits are, what's available, and all that. So here's, this is kind of similar to the last page of a IRS offer and compromise. It's very likely if you're doing FTB, you're doing IRS too. But anyway, court proceedings. So is there some type of court-ordered payment, yes or no? See what happened to it. Did you have anything repossessed? Anticipate an increase in income? Most people are going to say no. Bankruptcies and receiverships. When did those happen? Also, court proceedings relating to any other type of civil suits that might have been filed against you. Maybe even if it didn't relate anything, if it affected you financially, you can still throw that in there. Recent transfer of assets, beneficiary trust, estate, profit sharing. A lot of people are going to be no on that. last California income tax return filed. Most people, if you're still living in California, this should be the last year. I shouldn't say most people, because we have a lot of clients that don't live in California, but California goes after them when they, because they didn't file something or do something when they were there. But if you're still in California, your last California income tax return filed should be the last year if it's already due date. You need to be up to date in order to file this. If you haven't been in California for a while, then that year may be earlier. Total exemptions you claim on your return, and then adjusted gross income from your return. So just some basic information there. You're going to go look at your last, the tax exemptions you claim and the adjusted gross income. Now you're going to go down to things that were given away in the last 5 years. Essentially, what they're not given away, they were sold or given away. And this is for vehicles, equipment, and property. And what they're trying to see is, did you give stuff away to try to get her out of the tax debt? Did you have a really expensive car and then that was worth more than the tax debt and you gave it away? Or did you give away some property that you shouldn't have, that should have went to the state? That's essentially the reasoning on this section. And it's just basic information. What a description of the property, who took the possession, and what it was worth. If you gave your kid a car, that's probably not going to be an issue. If you had an apartment complex and gave it away to somebody when you owed the FTB $1 million, that's going to be an issue. Section 4, asset and liability analysis. So how much cash do you have? Most people don't have a whole lot. Bank account balances. So these are going to be your totals from that section 3 up there. Your totals: available equity, loan cash, security, safe deposit box value. All those numbers from before, you're going to be putting them in here, and then you're going to total them up right there. Total value of the real estate, same thing from section 3. And you're going to be doing those market values, mortgage payoff here, and then equity, and then total equity. So essentially, you see the pattern, trying to get totals. All the other assets, we'll go through them. Just so you know, go through some of these, notes, monies owed, accounts receivable. That's really going to be applied to some self-employed businesses, probably not even most of them. Judgment, settlements receivable, you're owed money on a judgment or a settlement, you won a lawsuit, something like that. Aircraft, watercraft, you got a boat, you got a plane. If it's an inflatable boat and it's small, they probably don't care. Jet skis is something you would put in there, that value. Interest in trusts, trustee, trustor, beneficiary, etc. What's your interest in it? Interest in estates, interest in business entities. Do you own any parts of other business? And then other assets. What else is there that can be claimed? And then 21, they're just trying to get the sum of everything. So all those assets together, this box, all get added up to be your total assets. And then the same thing happens down here for your total liabilities. Current liabilities, including judgments, notes, and other charge accounts, do not include vehicle or home loans. So this is everything but the vehicles and the home loans, because those are already figured out, in those equity equations there. So total of lines of credit, section 3, taxes owed to IRS if you still owe. If not, you should be sending that offer and compromise copy if that got accepted. The application acceptance letter. Any other liabilities you have, list whatever you have. Judgments, child support, any of those types of things. I'm sorry, not child support. That'd be a child support. I should just specify that should be a child support judgment. If you have a judgment that's more than the monthly amount you owe, the monthly amount you owe is covered later. Just to specify that there. Okay, monthly household income and expense analysis. So they're looking for your wages and salaries, all your basic types of income, pension, overtime, your spouse, their pension, their overtime, business income. So if you're self-employed, you're pretty much mostly just going to be putting this one. If you have rental income, hopefully you don't have a lot of equity, because that wouldn't help you. But business income, rental income, Most people aren't getting interest and dividends. Most people aren't getting trust payments and stuff that owe a bunch of taxes. Um, if you are getting a lot of those payments, that usually is not going to be a good qualifier either. What you're receiving from child support, alimony, unemployment, disability, Social Security, other household income. Yeah, so courts, and then what they're looking for here. Another thing I should actually mention: Social Security. You get to choose when to apply for it. If you're applying for it right before an offer in compromise, it's just going to ruin some of your numbers. So just keep that in mind. I can't tell you to apply for it or not. It's up to you, but that's just how the numbers are figured. The larger the numbers are, the less likely your odds are to get it accepted. So they're going with the gross and then the net. So you should have the gross number and the net number. And this is on a monthly basis. So in your wages, if it's paid bi-weekly, you're going to multiply by 2.167. If it's weekly, you're going to multiply by 4.15 to get those numbers. So total net monthly income is going to be there. Again, same thing. You get it. They're totaling everything. Now your monthly expenses, rent, mortgage, real estate taxes. If you're renting, you usually don't have that. Home insurance, association fees. You can put renter's insurance in here if you're renting. Usually you don't have association fees for rent. Groceries, number of people. Give yourself a good estimate. If you have special food needs like gluten-free, things like that are much more expensive, and this number is very high, you should have a doctor's note as well as a written explanation of what's going on. I would explain that. You can also put that in the explanation like in a cover letter, but have something from the doctor is recommended. Or they may not accept it. They may say it's unreasonable. Utilities, and then it breaks down all these right here. Auto payments, auto insurance, gasoline. They're trying to figure out how many numbers of miles to work, to give an estimate on your expense for vehicle every month rather than the IRS's version where they just pick a number based on your county. Life and health insurance, the actual payments you make that they're not coming out of your paycheck. Medical payments that you're not covered by insurance. Estimated tax payments, mostly applies to self-employed. Court-ordered payments, garnishments. If it's already on your paycheck, they already see it. That's why they don't ask for it. Delinquent taxes not owed to FTB. This could be to BOE, to IRS, somebody else, another state. Credit card payments, whatever those are per month. Keep in mind, though, the FTB can claim they're a superior creditor to the credit card payments, which could, they don't have to accept that technically, but there's some reasonableness on that situation there. And then other expenses. Think of what else you could add in there that's a legitimate expense that can be included in here. They don't want to see you living lavishly to try to get an offer in compromise, essentially. Now they're going to be a 3-year income summary on Section 6. So what this is going to be is they're trying to figure out the averages over 3 years. Like if this guy, say you made $150,000 one year, then you made $120,000 the next year, and then you made $25,000, year to date, and we're at the end of the year. Well, they might say, well, he's going to come back, so we're going to just not accept this offer. So they're going to look at the average of these last, the years, the 2 years, and then year to date. They call this 3-year income averaging. IRS does something similar to see, what your true average is. The basis for the offer, explain your story here the best you can. Any medical conditions, why your financial situation is not good, what's going on, how would this offer help you, how are these taxes ruining your life? If you have liens, explain why the liens are ruining everything for you. That whole kind of deal. That's where kind of an attorney comes in, actually. We're good at writing these parts. Source of funds. If you're getting it from a loan, you should put this information. Or if you're getting it from a gift, you put this information. This is usually going to be like in really large balance ones. In smaller ones where, you're not making a whole lot of money, a lot of the time the offer amount's going to be very low, so it's not going to be like explained. It's going to be like, oh, we're offering $100 or 500, and hopefully something really low gets accepted. I would just say return the funds, even though they're usually going to tell you it's getting accepted before you send the funds. You know, how much do you owe them and the tax years. This is important. IRS, if you miss the tax years, if you miss a couple on there, they'll fill it in for you essentially. Typically, almost every agent will tell you, oh, we're going to add this. Here's an amended offer. Here we go. FTB, they just don't settle it. So make sure you have every year in there. And we call in on every case and just make sure that we know every year is owed, because the client doesn't know all the time. And if you're not sure, you should call and figure it out. Or if you're having an attorney do it, make sure they did it, because there's a lot of tax firms that go based on the information you say, and they don't actually call any of the entities. So if you say, hey, I owe, 95, 98, and 2002 and 2003, but really you owe 94 and 96 and a bunch of in-between years, that's not going to get included, and you're going to have to do this whole thing all over again. And then see what you want to offer. We usually recommend offering really low at first, and then the FTB will sometimes increase it. We'll offer $100 to $500, and then increase it if needed, depending on the dad. But we do submit a lot for $100, and then some of those get knocked up. But a lot of clients we have, sometimes aren't in a great financial situation, and that does get accepted. So after, other than that, make sure you mail everything, certified mail. Send it out. So once you have that done, that's everything. So there's just these blank pages at the end. You don't need this. You need to sign a date at the bottom, send it with all the paperwork, and send it certified mail. And if it seems too confusing to you and you don't want to do it yourself, call us. You can reach us at 888-515-4829. Again, that's 888-515-4829. We handle cases where you owe more than $20,000. If you owe less than that, it's really not something we handle. But we do still recommend getting it in. This guide is not legal advice, but if you owe a lot of money, or you even owe a little bit of money, and you're not making a lot of money, good chance you can get it settled by doing this and getting it in. And look at our guide on trp.tax. Just click the tax help guide on top, and you can scroll down. You can find this page that will have all the information and forms downloadable for you. Thank you, and have a good day.